8 Steps of Warren Buffett's Investing Philosophy. You don't need to take any unusual steps if you want to invest like Warren Buffett. Buffett invests in great companies that are trading for less than their intrinsic value, and then he holds these investments for as long as they continue on being great companies. Some of the most essential Buffett investing guidelines that you can apply to your own investing strategy are as follows. 1. Look for a margin of safety. Buffett's investment strategy is founded on the idea that a margin of safety should come first. A margin of safety, in simple terms, refers to characteristics of an investment that help to protect investors from losing money. For example, if a stock is trading at $10 per share but its assets are realistically worth $12 per share, there is a $2 margin of safety. The asset's intrinsic value should keep the company's stock price from dropping too much. Always paying less than a company's intrinsic value is Buffett's objective. 2. Prioritize quality. Buffett avoids investing in garbage. He rarely buys failing companies, regardless of how inexpensive they get. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price, says Buffett, and this is one of the best Buffett's quotes for new investors to remember. 3. Don't go alone with the crowd. Another piece of advice from Buffett that is crucial for beginning investors, particularly in the era of Reddit message boards, is as follows: a stock shouldn't be purchased just because everyone else is. However, you shouldn't constantly try to be the opposite and sell the stocks that everyone else is purchasing. The greatest method to invest is to completely ignore the herd and concentrate on identifying value on your own, like Buffett does. 4. Have no fear of market corrections and crashes. Although buying low and selling high is the obvious objective of stock investing, human nature often drives us to make the opposite decision. When we see all of our friends making money, we feel compelled to invest as well. When stock markets crash, it's human nature to sell before prices fall any further. When stock prices fall, there are possibilities to purchase at a discount, which Buffett loves. Would you panic and flee if you discovered that your favorite store's pricing had suddenly dropped by 20% while you were shopping there? Obviously not. Buffett embraces discounts on his favorite stocks and says, opportunities come infrequently. 5. Take a long-term perspective while making your investments. Warren Buffett once said, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. This is one of the most significant statements about investing you can learn. He doesn't pick stocks because he believes their prices will rise this week, this month, or even this year. Buffett purchases stocks because he intends to own the companies for the long term. He still regularly sells stocks for a number of reasons, but he treats the majority of his investments as long-term holdings. 6. If the situation changes, don't be scared to sell. The most important thing to do if you find yourself in a hole is to stop digging, said Warren Buffett when asked about an investment he chose to sell at a loss. While he certainly wishes to own every stock he purchases in indefinitely, the reality is that outlooks change. You might be surprised to find that Buffett invested heavily in mortgage company Freddie Mac, OTC, FMCC, a few decades ago. He made the decision to sell after noticing the lender's management had started to take unwarranted risks with the company's capital a few years prior to the financial crisis. When the financial crisis hit a few years later, it was clear that Buffett had made a wise decision. 7. Understand the fundamentals of value investing. Warren Buffett is widely regarded as the world's best value investor. Value investing prioritizes purchasing investments at low prices compared to their true worth. The goal of a value investor is to buy $100 worth of a company's stock for less than $100, preferably much less. Value investors like Warren Buffett anticipate that the market will eventually appreciate a firm's full value, leading to an increase in the stock price of the company and a gain for the value investor. 8. Research and reflect. Investors are frequently shocked to learn that Buffett spends most of his time alone, reading, or doing nothing at all. As he is reported to have said, I insist on a lot of time being spent, almost every day, to just sit and think. Buffett sees knowledge as something that accumulates over time, and he attributes much of his success to amassing as much investment knowledge as possible.